Hey, Alpha fam, welcome back to another episode of Alpha Commission. Today on Alpha Commission, of course, we're going to go over the red in the charts. And as I mentioned in the last episode, this was probably going to be a profit taking week, as we can see that stocks have just been pumping for the last couple weeks. And so, of course, it's just natural that the market is going to want to take profits at some point. And so you can see a lot of the red on the charts from the end of the day yesterday. Of course, it was bright green when we were talking about it on Monday and the closings on Friday. So, of course, there is a little bit of a change in the market, but I want to jump straight into the charts and just kind of skip the usual discussion about inflation and recession. You guys can look at previous episodes for that. But right now, I want to just directly talk about the Bitcoin chart and how there is a 70% chance of a likely breakdown. We haven't been able to hold the support level above 24,000 and preferably 24,500 that I needed to see in order to try to confirm a bit more of an accumulation wedge on Bitcoin in order to see that kind of pump perhaps to 28,000. And so what we do see is a breakdown, and as this market, just chugs along to the upside, that does raise the standards as we go along. And our bottom line standard to maintain that momentum is now 23,900. As you can see, Bitcoin currently, as of this recording, is approximately 23,700 and just continuing to break down at a bit of a clip very close to the edge of this ascending triangle, this rising wedge. And what can we see on this rising wedge to confirm it? We have 5 clean points, we have two ascending converging lines, and then we're approaching a breakdown. And if we do break down from this previous low, then we will have broken our uptrend. And if we break our uptrend, then the most likely, it's almost 100% assured at that point that we would be seeing further downside. So we're already below the critical support for momentum. I mean, this could be flipped around in the next couple hours. I mean, we could get a solid bounce here and perhaps just try again. But look, just day after day after day after day, and touch, 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 we've been rejected from the top side of this wedge, and we've been rejected from holding on to 24,000 and definitely from 24,500 to really secure that bullish momentum. And just based upon the statistics of this type of rising wedge, there is now a 70% chance of a likely breakdown. And the measured move on that is a little bit controversial. It depends on whether or not you consider this kind of early support zone, which contributed to the momentum of the rising wedge, whether you consider this the first valley or you consider just this the first valley, which has kind of a roof over the valley in terms of the rising wedge. But either way, the measured move is going to be somewhere approximately 20,750 to perhaps 18,850. So you can see these yellow numbers on the side here. And of course, to just recover our momentum, again, we need to be solidly above 23,900 and preferably to be very strong above 24,500. Now, the zones that I've had, in the past videos have basically had the price action meandering in between these kind of like momentum zones. A little bit bullish, but not very bullish, right? And so we've just been kind of meandering to the upside. But now you can see we're cleanly below that bullish momentum zone. And so we are probably going to test some of these lows, especially as stocks are looking a little bit ugly. If we go over to stocks, you can see here on the QQQ, you can see that the pre-market is threatening to open up lower than our current price. So a drop in stocks might push Bitcoin down below its wedge. If you look at the SPY, right, the S&P 500, you can see price is in pre-market below the current price, and so that could also push Bitcoin below its wedge. And we also have it on the Russell 2000, and of course on the NAS 100, looking even more toppy, suggesting even more likelihood of a pullback. And of course, crypto trades very closely and has a high correlation with the NAS 100. And so this NASDAQ 100 mini futures, kind of is setting the standard there in terms of it being a red day, right? So let's just jump back to Bitcoin. And of course, although we have this pattern on, on the 24/7 exchange, does it also carry out over to the CME chart? And of course, yes, it does. I mean, these things usually are pretty close together. I don't see any particular difference here. Of course, the CME doesn't have that long drop to 17,500 that exist on the 24/7 exchanges. So this professional chart over here just shows what I've been talking about for several weeks now, is that we've broken down from the teardrop, we've retested the top of it, and then there's a very good likelihood that we break down from it, just like we've done time and time and time again. So, guys, do I have a lot of hope that this time is going to be different? No, there is a little bit more of a curveball in this one, in that it has spent more time to the upside. It has been filling out this rising wedge just a little bit more than the other instances did. You can see these ones just died very quickly. They didn't even bother putting in rising wedges, really. They just kind of broke the teardrop shape and then died straight away. Of course, we are building a very technical rising wedge on both the Bitcoin CME chart and the 24-hour exchanges. But unfortunately, that rising wedge, that technical pattern, has a 70% chance of breaking to the downside. So you're saying there's a chance? Yeah, there's a 30% chance that we could recover from this and break to the upside. So it could end up being a massive fake out. But would I bet on that, right? Would I bet on that? Would I bet 70% against 30%? Probably not, right? So that suggests that we should consider, just safeguarding our positions, perhaps shoring up our stop losses, perhaps taking a little bit of profit off of the table, just in case this thing breaks down as stocks break down, which I've already shown you that the pre-market suggest that they are going to do. Now, if you are part of the Kadena family, of course, we've been talking about those, those buy-sell zones, and we are squarely in the middle of my, retrace buyback area. I don't know how deeply that a Bitcoin's going to fall. If Bitcoin does fall one level or two levels, then perhaps, we're talking about that 167, perhaps that 185 price, which we are pretty close to. So we've been holding this area pretty well, but the thing that I don't like is that we are completely out of this kind of channel. Now, this channel isn't perfect. We can fidget with it and whatnot, but you can see that that Kadena broke down from its own rising wedge ahead of Bitcoin, which I suggested might be a heads up for what Bitcoin might do, right? Because if Kadena was being a little bit more bullish than Bitcoin, then if Kadena broke down from a rising wedge, that might just suggest that perhaps Bitcoin might do the same. And by the same token, maybe Kadena is going to find support before Bitcoin. I wouldn't count on that. If you guys are buying in on this area, you guys can take the risk. You can see that this is the lowest price that we've been in, a year or whatnot. And so, taking risk in these areas is not the most dangerous thing to do. If we zoom out, we can see, what is the risk of buying down here versus the risk of the guys who were buying up here. This is an incredibly low risk area, but can we go down lower? Yes, of course. And if I take, some fractals from this early area, you can see that it kind of matches what we've been doing here. And however, that fractal did have a bullish uptick at the end of it, and we're having a bearish downtick. And so this bullish fractal is kind of reaching some of its limits. And so I wouldn't necessarily be counting on that. We can also take a bearish fractal from this zone over here, which I've just distorted to kind of fit our price action the best I could. And you can see we get kind of a breakdown after a very similar pattern was put in. This is just fractals. You can't really trade off of it, but you can understand the psychology of these coins. And so if we are seeing yet again another level breakdown, this could suggest the Kadena is going to perhaps break down to the lower level of support. Of course, this breakdown was so traumatic, like what you see right here, because the support was so low below it, right? So you don't have to be paying attention to this downfall. This just indicates the direction that this fractal would suggest. And in our case, we have two levels of support here. We have this bottom support. So we're really talking about three levels of support that we need to break. And then we have two levels of support underneath that. And so of course we have basically levels of support. And then even we have this bottom line. Should just crypto just completely break down and shit the bed, right? But of course, we're not counting on that. We are just considering that there may be a pullback on Bitcoin because that measured move is only to the 20,000 region. It's only to the 19,000 region. It's not necessarily significantly below that. The arrow that I have drawn here is not pointing to where I think Bitcoin would break down to. It's pointing to the volume decrease, right? So we have a huge, amount of volume over here, right? But we have a very low volume as we're going forward. And so as this volume is decreasing, our bullish volume is decreasing, and that just suggests the likelihood of a breakdown can be increasing, right? So I'm not going to spend too much time on this. It's already been about 13 minutes. We can pop over to Ethereum really quick, and we do see that Ethereum has a very similar setup going on. It has this. This really isn't something that we can count on. It does have these higher lows that it is, still putting in, just like Bitcoin. There's nothing really to suggest that this thing is just going to die. But of course, if there was a measured move, it could be anywhere in the $15,000 to $13,000 area. Or it could just fall down to its trend here at 18,000, or perhaps even catch support in this area around 17,000. Right? So you can see we've bounced from here before. So, 17,000 wouldn't be weird if we just caught support in that area, even if we do break down. And since Ethereum has been leading the way, if Ethereum does catch, some support around 17,000, or perhaps, some of these higher supports, which are a bit fragile, but, we've bounced from these areas before with pretty significant candles. So it could happen again, right? Then I wouldn't be too surprised. So I'm not overly bearish right now, guys. We have support below us, but it's just that, we can be a little bit shell shocked from the history of this really huge economic downturn, which has just destroyed the charts, right? And could, bring us down to another level lower, as the measured move for these things, still point to, a 10,000 to 14,000 as a possible kind of like a middle, kind of middle scenario of what's possible on the charts. Of course, the bullish scenario is that perhaps we just double bottom or make a higher low here and then continue going. And then the very bearish, outcome would be if we hit something like, 5,000 to 8,000, which would be that Binance scam wick. It would be the CME gap down there. It could be just the collapse of the stock market kind of scenario. And when we think about the stock market, we have to understand that, as we're hitting these kind of resistances, if we don't have a continued bull run, which what are we going to have all-time highs in a recession and in inflationary times? It's possible, but if we don't do that, then perhaps we could have a, one, two, three, four, fifth Elliott wave, right? A fifth Elliott wave correction down even lower than our previous low, and that would just drag crypto to the abyss, and just drown it with it, right? Of course, if we don't have any type of leg down, and if we do just kind of make a higher low here, just a kind of a pullback, and then we continue to go, then maybe this was just an ABC correction on an uptrend, and perhaps the US market is just that robust. Maybe it's just that bullish, okay? We also have the summer relief rally phenomenon going on, and it's, of course, it's overlapping with the midterm elections rally, which there's usually some type of rally in stocks, ahead of elections. And, of course, all of this is for political and economic reasons. They're just like historical things that always seems to happen. And so those things can be fake outs. And we might suggest that by, now that we're mid-August, which is when I suggested we could perhaps start seeing a slowdown, and perhaps definitely by the middle to end of September, we are in that area that could be getting a little bit trappy. And so you guys want to be aware that we're very toppy. We're very toppy on the stock market charts, and that if there's pullbacks, that should be expected. We can't just go straight up forever. We're going to have a significant pullback and at least make a higher low at some point on these charts. And an area that I would suggest is maybe this, this kind of 318 area, 315 area. And you can see right now the pre-market is saying 329 on the QQQ, right, the NASDAQ, even though our current price is 330. So perhaps we do work our way back to that area, or perhaps even lower. And we'll have to find out as the weeks progress. But for now, it would probably be just a good idea to protect your positions, as we can also jump over to the US DT dominance chart, and you can see that USDT is breaking out of this long descending wedge, right? That started basically in June, and we're now finally breaking out of it. And whenever price action breaks out of a descending wedge, it tends to pop up, which would suggest that the market may end up putting its money back into USDT, taking it out of coins, which of course would drop the price of those coins. And so that would suggest that Bitcoin and other cryptos are about to take a leg down in price when we see USDT breaking out of this wedge. Now, it hasn't conclusively broken out yet, but by the end of the day, that should be confirmed if the candle is still sticking out like that. and then, maybe it does a retest before firing off, giving us perhaps the rest of the week to prepare, or it could just skyrocket. You understand how these things work. We also see the US dollar, right, breaking through its previous resistance line, now using it as support, and that is not good news. We had hoped that it would reject here with that indecision candle and that it would come dropping back down and continue this downtrend. But as the dollar is just pushing upward, there is a little bit of resistance it may have to face, and it could still get rejected. This could be just a fake out, but most likely it's going to continue, and that's going to also be oppressive on the markets. This would be a bullish check back to the 20 EMA on the weekly. And if we look at the weekly chart for the US dollar, you can see that maybe this wasn't so much of a breakdown. Of course, it was a temporary breakdown. We did get relief. We did get a really amazing rally. And anytime the dollar breaks down like this, usually we get amazing rallies. But what you can see is similar to here, where we had this kind of a pullback. We tagged the 20 EMA. This wick right here almost tagged the 20 moving averages there. And then, if it continues to go on its way, that was a pretty decent and bullish check back on the weekly, even if on the daily it looked pretty bearish. It looked like it was perhaps going to kill over, perhaps going to give us a much better market conditions, but in fact it seems to be recovering, and it may just continue on its way on this kind of a bullish, this bullish kind of growth curve pattern, and it may even just check back up here before it ends up breaking down. And so, could the dollar reach 108? Could it even reach 114 or even 118 before ultimately, coming back for a much bigger check back, perhaps to its 200 or the 300? Yeah, I mean, unfortunately, we could find ourselves in some harsh, very harsh dollar conditions. Even if we're breaking down from the growth curve, they tend to check back on the underside of the growth curve before they break down fully, sort of like what Bitcoin is doing, right? And so a bullish dollar is not good for crypto. It's not good for stocks at this time. We can also see on our volatility, our stocks volatility, that we are just using this area as support, and we are getting a kind of a bullish bounce here. Not clear yet if we're going to be trading in this heavenly zone. If we break down here, stocks could just have an amazing bull run, and if we can just swim in this area, it would just be an amazing bull market. Okay, we will have a bull market, but if we get rejected here, then we're going to have kind of a bearish time. If we break back up in here and even go higher than this wedge, right, higher than this midline right here, we're going to have a very bad trading conditions, and it's going to be a very, very difficult time, guys. Okay, like we need to stay in these type of blue zones. If we head up to this kind of red and orange zone, it's just very, very bad for trading. The VIX is volatility. Too much volatility really harms the stock market. And, low volatility is very good for the stock market, very good for trading. Okay. And so we're right now we're in a good spot, right? And so the market has been very bullish, but again, we're having a green candle today. We are having a bullish candle today, and so if that bullishness continues, it means the day could be kind of bad, right? It could be kind of bad for us. Let's see if we can look at anything else. I think that pretty much covers it. This video is about 25 minutes long, and so I am going to end it there. Guys, just understand that this isn't necessarily fate. We don't have to break down, but in order to preserve our momentum to the upside, we do need to recover these zones. We have a 70% chance of breaking down. You guys are going to remember, and if you look back at my videos, I did suggest that 8-hour signal, right? That very dangerous 8-hour volatility signal was playing out. And while it temporarily had this pardon me, while it started to play out and then it temporarily had this kind of fake out, what did I tell you guys? The 8-hour volatility usually results in a dump, right? Like 7 out of the last 8 times it results in a dump, and it usually has a fake out or even two fake outs built into it. And so you see a little fake out here, you see a huge fake out here, and if we continue on our way, perhaps this is going to lead into massive dumpage. And then on top of that, right, we have the daily signal now having basically maxed out. There was a little bit of a fake out on it. We're not really sure how this one is going to play out yet because we also have to look at the CME chart. And the CME chart is more important, I believe, on these daily moves. And what we can see is this, um, moving average on the actual ribbon, right, hasn't yet hit the bottom. And so we're not necessarily going to understand the fullness of this move until we get across, sort of like they crossed right here, right? They crossed right here. When we see these things cross, it's almost guaranteed the move will be playing out. And so if these things cross while our momentum is facing the downside, right? Just like here, right? If while our momentum is pointed to the downside, then most likely that explosive volatility expansion will be to the downside, okay? If we are able to capture our momentum to the upside, then that explosive momentum that we've been waiting for almost 2 weeks now, as it's just been building up. Originally, we were looking at the 4-hour extreme, and then, and that was this one over here. And now we're putting in a new 4-hour extreme. Then we were looking at the 8-hour, right? And this has just been building up. Now it's on the daily, right? And it's even moved over to the professional exchanges. And so we've been having to give priority to the bigger signal, to the more powerful signal, each time a bigger and more powerful signal comes along. And so right now we are waiting for the professional exchanges, that big money, that smart money, those real market moving, big dogs, the whales, right? For them to choose their direction, for them to move the market and show upward momentum or downward momentum, and then this explosive volatility is going to carry us forward in whatever direction they point us in by the time it starts to expand, okay? And so that's basically, it's a little bit of a simplification, but that's basically what's going on in a nutshell. And those moves do tend to be around, 20 to 30%. Let's just say if we had 20%, yeah, that would bring us to that 19,000 range. If we had 30%, that would bring us to like a 16,000 range. And hey, if we have just a light one, then maybe we get that 20,800 move and perhaps even just continue up from there, being a higher low. And if we do make a lower low than that 17,500, there is a good chance that on the RSI that we could end up putting in bullish divergence if we end up making a higher low on the RSI. And if we did build up bullish divergence, basically a higher low on the RSI, then that also could be super bullish because it could potentially just make us bounce up like this and just skyrocket, especially if it's being printed in this bearish control zone, which would suggest, a counter to the market. So we're going to be looking for these things. Don't be over bearish, don't be over bullish. Try to have just some reasonable considerations. Please protect your positions. Don't be a perma bull, don't be a perma bear, just be a clever little alpha monkey. We're trying to do our best here. We're trying to have good thoughts. We're trying to, maintain our momentum. But now that we've officially, lost it, we do have to be on high alert for a down move. As long as we were hanging out between these areas, there was always a chance. But unfortunately, it looks like we're starting to lose that chance as the momentum, is leaving us behind. So that was your alpha for the day. Stay safe and happy trading.